ARM Limited, a renowned British company known for its circuit designs found in billions of electronic devices, has filed for an initial public offering (IPO) that is projected to be the largest of the year in 2023. However, the company faced challenges in the most recent quarter as its profit decreased by over 50%. ARM primarily caters to the smartphone market, which has experienced a slowdown in sales, including a 7.8% decline in the second quarter, according to the International Data Corporation. In the latest quarter ending in June, ARM reported $675 million in revenue, a decrease from $692 million the previous year. Net income for the quarter also more than halved to $105 million. ARM holds a significant position in the semiconductor industry, serving major companies such as Apple, Qualcomm, and Advanced Micro Devices, which rely on ARM for their chip designs. ARM has maintained neutrality by providing its designs to all companies without favoritism towards any particular entity. The market segment targeted by ARM involves chips that house processors used in smartphones, personal computers, televisions, servers, cars, and networking equipment. The company anticipates this market to grow at an annual rate of nearly 7%, reaching approximately $247 billion by the end of 2025, as stated in its filing with the Securities and Exchange Commission. While ARM's current revenue represents a small portion of the projected market value, the company expects the cost and complexity of chip design to increase in the future, leading to higher royalties as a proportion of each chip's total value. The listing is scheduled to occur on Nasdaq next month, following meetings with investors. This IPO will serve as a test for the renewed interest in IPOs after a period of reduced activity due to concerns about inflation, stock prices, and economic growth. Softbank has confirmed its acquisition of a 25% stake in ARM from its Vision Fund unit for $16.1 billion, valuing ARM at approximately $64 billion. However, Softbank has cautioned investors that the purchase price may not reflect the company's anticipated value following the IPO. Although the demand for PCs and smartphones that surged during the pandemic has slowed down in recent quarters, executives and analysts foresee a long-term surge in the demand for data and computing power, which is expected to drive chip sales to new heights in the coming decade. Softbank intends to list a minority stake of around 10% in ARM, while retaining the majority of the company. All proceeds from the IPO will go to Softbank, as stated in ARM's filing. Over the past 2 decades, ARM's circuit designs and basic chip architecture have become widely used in smartphones. The company sells these designs to chip makers who incorporate them into finished chips. In recent years, ARM has expanded its presence into more powerful chips and is benefiting from the growing interest in artificial intelligence, AI, which presents new sales opportunities. According to ARM's filing with the Securities and Exchange Commission, (SEC), over 30 billion ARM-based chips were shipped in the company's last fiscal year, marking a 70% increase from 7 years prior. NVIDIA, a chip maker, saw a significant increase in its market value earlier this year, surpassing $1 trillion, primarily due to the use of its chips in creating powerful generative AI tools like OpenAI's ChatGPT. NVIDIA, which attempted to acquire ARM for $40 billion 3 years ago, is incorporating ARM circuits into some of its forthcoming high-performance AI chips. ARM stated in its SEC filing that chips based on its technology are already involved in AI work on billions of devices, including smartphones, cameras, and cars. Going forward, there will be a stronger emphasis on performing AI tasks faster and with lower power consumption. Due to its large size, ARM's IPO will be closely monitored by investors as an indicator of the sustainability of the recent revival in the IPO market. It follows the successful but smaller IPOs of restaurant chain Kava Group in June and direct-to-consumer makeup seller Oddity Tech in July. Other major IPOs expected before the end of the year include grocery delivery company Instacart and shoemaker Birkenstock. ARM's substantial exposure to the Chinese market raises potential investor concerns due to the ongoing tensions between the United States and China. In its SEC filing, ARM noted that approximately 25% of its revenue came from China in the last fiscal year, making it vulnerable to economic and political risks associated with that country. The company anticipates declining royalty revenue from China, citing economic issues and export controls imposed on the country as contributing factors. China's recent decision to block Intel's bid to acquire Israeli contract chipmaker Tower Semiconductor highlights its ability to influence the development of the U.S. chip industry. This intervention raises questions about potential regulatory challenges that ARM may face related to its operations. ARM also disclosed in its filing that its top 5 customers accounted for approximately 57% of its revenue in the last fiscal year. This concentration makes the company susceptible to industry slowdowns, changes in trade protection policies, and adverse developments that may impact demand for its designs. This IPO will mark the second time ARM has gone public. The company previously listed its shares in New York and London in 1998, capitalizing on the growing market for cell phone chip technology. ARM remained publicly traded until Softbank acquired it in 2016.